Welcome to the channel, everyone. On today's video, I'm going to discuss my top stock pick for the year. The way things are looking right now, I'm going to continue buying Brookfield Asset Management. This is going to be a great company, and 2023 is just going to be fabulous for it. We're going to go into why. First, we're just going to take a look at the basics. Brookfield Asset Management trades under ticker Bam.To on the Canadian side. However, it is dual listed. Now, for those of you who are unfamiliar with this, it actually is a relatively new ticker because it's a spin-off from Brookfield Corporation. Brookfield Corporation is very popular among investors and analysts, but it only has around a 1% dividend yield. Now, that's fine, but myself being a dividend growth investor, that's just not enough for me. It is not going to cut it, so it can't make my portfolio. So that's why I'm invested in BAM. BAM actually has a yield of 4.05%. Now this is right up my alley. This number here is enough to help me in my retirement goals. And what's even better than that is their dividend growth policy going forward. We're going to touch on that in a second though. I just want to touch on how Brookfield Asset Management makes their money. They are asset managers. So any fee-bearing capital that is invested with them, they take a small percentage of. In addition to that, they have incentive bonuses. So if they're doing really well, they get additional fees. This is how they make money simplistically, if we just break it down like that. Now, why I like this is that BAM is actually a financial sector stock, but it's not traditional in the sense that it's not in the banking industry, it's not in the insurance industry. It's very alternative, and that has a special place in my portfolio because I don't have any alternative asset managers currently. On the screen currently is my favorite slide from their investor presentation, and these points that I'm going to point out right now are directly relevant to why I love this company and why it's going to be doing very well in 2023 and beyond. Now, they're highlighting that they have no debt. Okay, so obviously this is important in a high interest rate environment. You've seen what's happened right now to companies with high amounts of debt. I'm going to reference Algonquin Power and Utilities. It was a beloved dividend payer. However, they ran into trouble with the amount of floating debt they had. They had to cut their dividend, and all the shareholders really felt the pinch on that one, and the stock price went down by roughly 40%. Additionally, you could look at a bunch of your favorite REITs. I'm sure most of them are down this year and even last year because of the amount of debt that they have and the amount of floating debt specifically. So BAM's not going to get themselves in that type of trouble. I mean, they're not immune to everything, but they're immune to that. And a lot of the market right now is afraid of high debt companies. So, with this company having no debt and very asset light, I think it's a unique opportunity that's really flying under the radar currently. Now, right here, their target dividend payout ratio is 90% plus. 90% plus is going to put this thing in a separate category all of its own, because a lot of you are going to be familiar with the other Brookfield tickers. They have BEPC, BIPC. Those are two very popular decent dividend paying companies that do not have this dividend payout ratio at 90%. Okay, so those have great dividends. They've been around for a while. They're in the 3 and 4% range. Brookfield Renewable obviously being the higher payer. Now, BAM that we're talking about here has a 90% target dividend payout ratio. They're paying out a lot of their earnings, and this thing is just going to compound, and it's going to leave those other two companies in the dust, in my opinion. Why, you might ask? This: 15 to 20% of fee-related earning growth targets. Now, 15 to 20% is a little bit lofty. However, Brookfield Corporation, when they put out estimations of how their businesses are going to do, they're pretty close. They do really well. So, 20% is a lot. I might take that with a grain of salt, but on the lower end here, 15, I think they can actually do it. Management has proven themselves to not be liars, to be worthy of our respect, and they've earned our trust. So I think they can do this. Now, if they're going to grow their earnings 15 to 20% a year, and they already have a 4% dividend yield, and they want to pay out 90% of it going forward, you can do the math on that in your head, and you can just see that year over year, this thing is really going to fly up. You might see 15% dividend increases per year until 2025. Now, I say 2025 because in their investor presentation, they did say this 15 to 20% of earnings is not forever, but probably until 2025, and then at that point they're going to reevaluate the situation. Now, the way BAM makes money is they take a little fee, a little small percentage of all invested capital in all of Brookfield's subsidiaries. So they currently have $53 billion total invested in Brookfield Renewable, 93 in Brookfield Infrastructure. These are the two that I referenced earlier. Almost $40 billion in private equity, 98 in Brookfield Property Partners that went private a few years ago, for those of you who remember, and 149 in credit and others. So it's very widely diversified, and they take a little percent of this one, that one, this one, that one, that one. And, you know, Brookfield is always putting out new funds. They actually have another renewable and transition fund coming out later this year, I believe. So that's going to be, you know, another income stream for them. Now, BAM trades on the Canadian Stock Exchange, and a lot of the Canadian companies make the majority of their money in Canada, with very little coming from the rest of the globe. But that's not really the case with BAM specifically. As you can see on the screen here, they make money in Europe, the Middle East, Asia Pacific, South America, and North America. I know North America is the biggest, but they do have a worldwide footprint, and that is important going forward. A lot of their renewable power stuff in Europe is actually really cool. So it's a global company. You can buy it right here at home. The dividend is high today, and it's going to be really, really high going forward, in my estimation, based on the information that I gathered from the investor presentation. Now, these are all my interpretations from reading the investor presentation and listening to the Brookfield Corporation CEO, Bruce Flatt, speak. Now, if you guys interpreted things a little bit differently, you should let me know. If you think there are, some negatives associated with this company, you guys can let me know. I really don't think so, though. There's only one thing that I think that could hurt this company a little bit, and that is if cash inflows into BAM dry up a little bit because we're having a terrible recession. And if that was the case, I think BAM would hold up a lot better than other companies based on the fact that they don't have any debt. They're asset light. They're going to be fine. The only thing that would have a negative effect there would be that the dividend wouldn't grow as high. But that would be short term, and I wouldn't worry about it at all. BAM is currently 4% of my dividend growth investing portfolio, and I'm going to bring it all the way up to 10 if I can. It's going to take me some time to raise some more funds, but I love this company. I hope you guys are buying it too, and if not, let me know why. I'll see you in the next one. Thanks.